We are live. What is good, QC? Guys, I'm grateful to be here today. Today, we're going to be going into some crypto basics. We're going to be covering the bare minimum. The stuff that you really need to know in 1 hour of what's going to keep you safe in these markets, what's going to allow you to profit, right? The information that's really necessary to understand what the heck is even going on, right? So I'm going to start this webinar off, guys, really from square one. And I'm actually going to bring up my screen. I'm one of those people that I love to like just pull up the internet to like kind of back up some of the things I say. I just kind of go on a ramble and we'll just see where it takes us, right? But we're talking about Bitcoin and we're talking about the basics of it. Guys, the very first place that you're going to go, that I go to when it comes to just looking at the cryptocurrency market, understanding about it, learning it. This is your hub. This is the place, guys. Coinmarketcap.com. If you're brand new to crypto, go ahead, type this in your Internet Explorer, favorite this page, bookmark this page, because this is your go-to place. This is where you're going to see not only what these coins are worth, you know, some of the price of the coins we can see here, right? We can see the performance that they've had in the last 24 hours, the last 7 days. You can see the overall market cap. I'm going to explain that in a second because that's very important. How much volume is happening and also the supply, right? And so as you can see here, you can see this place is a great place to see the overview of all the different cryptocurrencies in the market. And they're all ranked by their market cap, right? You can also see stats as how many different cryptocurrencies there are, the markets, the overall market cap. And this is, like I said, a great resource, right? This is like your homepage for crypto, at least it is for me, right? And so when we're getting into crypto, why I love this website so much for people who are new is because you can learn so much on this website. For example, you want to learn about Bitcoin, which I'm sure most of you here have heard about Bitcoin, right? You can, when you click on Bitcoin and dive in here to the details of it, you can see not only the price graph, right? But it also has, what I love about CoinMarketCap is it has explanations on what this stuff really even is, right? What are these cryptocurrencies? And if you want to know about cryptocurrency, and this is a crypto basics call, you know, the very first crypto that was ever made was Bitcoin, right? Where did Bitcoin come from? Well, it was created in 2008. It was created by an anonymous person actually by the name of Satoshi Nakamoto. And look, all that information is right here on CoinMarketCap, right? I actually used to have an Excel sheet back in the day where I organized all the different cryptocurrencies, what they were, who founded them, you know, the different information. And then CoinMarketCap did that for me. They have an amazing database here, guys, where you can read about the history of these cryptocurrencies, read about who did what makes these things so special, what makes Bitcoin unique. And, you know, for me, Bitcoin is unique because this is a first system of money that we've ever created or ever had that isn't operated by a government or a central bank. And that's huge because cryptocurrency is not controlled by any government or central bank. And that is a complete 180 from previous money that we had because, guys, all the money that we've ever used in our lives before cryptocurrency is issued to us by a government or a central bank, right? And that gives it a supreme advantage in the sense that this is money designed for the people, right? And when you go down and you look into how the monetary system works, guys, this is a basics call, right? But my intention here really is to point you guys in the right direction to get you guys started on that world of discovering cryptocurrency, what this stuff is and why it's so important. And what I want you guys to look into is something called the Federal Reserve. In order to understand why cryptocurrency is so important and why we need this, you have to understand what we need to get rid of, the things that we're trying to improve upon. The Federal Reserve System is definitely one of those things. Guys, this is, in my opinion, and many others, and you look into this, not a very fair system for the average American, right? They are a private company. The Federal Reserve is not a federal at all. And it's a bank that loans money to us for a profit. To sum it all up, how the Federal Reserve works, it's a scam. And I'm going to leave it at that again, because this is a basics call. I actually have a YouTube video on my YouTube about an hour long explaining how the Federal Reserve works, why it's no good, and how crypto is actually going to solve that, right? And so, like I said, I'm here to point you guys in the right direction to the right topics when it comes to understanding crypto and knowing what's going on here. Again, Bitcoin is the #1 currency. It was created in 2008. And a lot of people are buying into this narrative of Bitcoin being digital gold, right? And this leads us into our second topic, a very, very important topic here in crypto for basic beginners. You got to know this stuff. Why do people call Bitcoin digital gold? Drop it in the chats if you know. I want to give it a second for the chat. Drop it in the chat if why do you think people call Bitcoin digital gold? Like they call it gold 2.0 or digital gold. Why do you think it's gotten that moniker? Yep, store of value, finite supply, limited amount. Exactly. You guys are all right. Because it's a commodity. Yes, you could definitely consider it as a commodity as well, depending on what you value as a commodity. And so what makes Bitcoin very attractive to investors, what's given it this narrative of being digital gold is that just like gold, Bitcoin has a finite supply, which gives it the status of being a store of value, right? What is a good store of, guys, drop a good, or let me phrase this question right away. What's an example? Okay, so now we have an example of a good store of value, right? Bitcoin and gold are great stores of value because they're finite, right? Something that is not finite is a terrible store of value, right? And so real estate, houses would also be another great stores of value because they're something physical and there's only so much real estate, right? There's only so much land in the world. You can make your own garbage islands, you know what I mean? But land is a commodity that's very valuable because there's only so much. Same goes for gold. There's only so much gold. It's valuable, right? There's demand for it because there's only so much. It's scarce. Bitcoin functions the exact same way. If you look here, the max supply of Bitcoin is 21 million Bitcoin. There will never, ever, ever be any more Bitcoin than 21 million. Today, already, 18 million Bitcoin exist in circulation. So Bitcoin, just like gold, is actually created through mining. So just like they mine Bitcoin, like they mine gold out of the earth, right? Bitcoin is mined, but it's mined through computers. And so in the beginning of Bitcoin, way back when it was created, there was still a max supply of 21 million. There's always been a max supply. But in the very first days of Bitcoin, the circulating supply was very, very low, right? Actually, what's cool about Bitcoin is anybody can know how much Bitcoin is being made every single second, every minute, every single day. It's not hidden. It's something that's very public knowledge. Another reason why people love Bitcoin, because how many dollars are going to exist next year? Who knows? However much they decide to make. And going back to what I was saying before, a US dollar is a very good example of something that is not a store of value. Can anybody tell me why? I just gave it away. I literally just said it. Why is the dollar not a good store of value? Because they print it. Because they can print as much as they want. Because it will exactly all it's reserved. Guys, these people that run this right here, they can make as much money as they want. And this is why you see the value of the US dollar not compared to a euro, but the buying power of one US dollar just absolutely getting destroyed since this system was created, right? That is why, because they can make as many as they want. There's a question in the chat, why 21 million? That is something that you can read up. Satoshi actually wrote a little excerpt in the white paper about why he made 21 million. It was something he decided based off of his just projections and predictions. There really is no exact hard reason why it's 21 million. It's just 21 million. But yeah, so that is the fundamental reason why people look at Bitcoin. They see, whoa, this is a public network. It's not run by any government or bank. This is a public network that's free for anybody to use. It works globally, and it has a monetary system where it's very easy to understand. There's only 21 million coins. And getting back to what I was saying before about how it's created, that's the next important thing to understand about Bitcoin is how it's created. Bitcoin is created through mining. And so in the very beginning, when Bitcoin was created, there wasn't a lot of supply. We have 18 million because it's existed for quite a while now, for 9 years. In the very, very beginning, Bitcoin was made at a rate of 50 Bitcoin every 10 minutes. Every 10 minutes, 50 Bitcoin were mined. These are mined by the people running the Bitcoin network. It actually functions as a way for the people who are running the network to be incentivized to do so. And it's a great way that gets everybody involved, because if you run the network, we'll give you rewards, mining rewards, right? That's essentially how you can think about it. And with Bitcoin, let me pull up my chart now, because guys, let's be honest here. You have to be honest with yourself. This is also a basic concept. You have to be honest with yourself when you're getting into crypto. Because yes, this is a lot of information. It's new, it's exciting, but it can also be a little bit overwhelming. But one thing that's always helped me is a very clear understanding of what I'm here to do. Guys, you need to be honest with yourself of why you're involved in cryptocurrency. I know why I'm involved. I love this technology. I have a passion for just new things. But I would be fooling myself and all of you guys if I said I wasn't here to make money. Before I even go over this, who here is here to make money? Drop one in the chat. If you're here in crypto, if you're here today learning about crypto because you want to make money, right? We're not here to learn about how to create a blockchain. We're not here to learn about the ins and outs of how these real technical things work, right? We're here to invest in these projects to make money. So let's be real with ourselves and let's understand what we need to understand, which is the things we need to understand to make money, right? Let me get rid of these. These are doing a Spanish call. And so, like I was saying before, I'm giving you guys today the information you need to know. Like the mining, I give you the bare basics, right? Like how it's created, the value of the dollar. These are the bare minimums that you need to know and understand how to make money here. And so Bitcoin, like I said in the beginning, it was created at a rate of 50 Bitcoin every 10 minutes. That's how much Bitcoin was created in the beginning when it was first launched. What happened in November of 2012? Drop it in the chat if you know. There's something super specific that happened in November of 2012, and it happens every 4 years on Bitcoin, right? It's a super important event, and it's called the halving. Exactly. You guys are on this. Every 4 years, Bitcoin has a halving event. What does a halving event mean? Well, it literally means that the amount of Bitcoin that is being created is going to be cut in half. So they're going to be making less, right? And so in November of 2012, we had the first halving event, and thereafter, only 25 Bitcoin were mined every 10 minutes, right? And so what happened to Bitcoin's price pressure? Remember, Bitcoin is a scarce asset. There's only so much Bitcoin, right? We know that. There's 21 million, right? We know that Bitcoin's a network that can't be stopped. It's decentralized. No one controls it. It's awesome. It's free, essentially. And so we already understand it. And so when all of a sudden the supply, the amount of Bitcoin going out there is cut in half, what happens? The market reacts. And this is the cycle that Bitcoin's played out over its history. And this is a cycle that's going to continue. It's simple economics, supply and demand. If you reduce the supply, but the demand is still constant, the price is going to go up. And that's exactly what happened. And so we went into a price discovery mode where Bitcoin rallied from $16, from a low of $2 all the way to a brand new high of $1,200. And I'm just measuring here on this chart from that day from the month of halving the growth, right? Because that's the easiest way to break it up chronologically is that day, right? From the growth here, you're looking at obviously higher percents. But from the day we have the halving, we usually make a low before that, but we do make a high right after the halving. Simple economics, right? And we see it makes a new high. And then what happens again in 2016? The exact same thing. We have another halving. What happens to price? What happens to price? It gets cut in half again. Or I'm sorry, what happens to the amount of Bitcoin being mined? The Bitcoin coming out, right? Being created. It gets cut in half. What does price do? It reacts crazy. Over 18 months to 4,000% to a brand new high of $19,000. Guess what just happened this year? May 2020, we had another halving. Guess what people like myself have been talking about for 3 years now? Oh, when we have the halving, we're probably going to see a new all-time high. It's not like anyone, like I'm that smart. It's literally like seeing a pattern, seeing 1 plus 2. What's going to happen next? Plus 3. What comes after 3? 4. This isn't complicated, right? It's very simple economics, supply and demand, right? And so now 6.2 Bitcoin are being mined every day, every 10 minutes. This actually equates to about 900 BTC per day, right? And so this is where we're at right now. This is the current monetary system of Bitcoin. Right now, they only make 900 Bitcoin a day, right? And I believe over the next 12 months, over the course of this year, based on previous price cycles, we've already created a new all-time high. Everybody knows that. But I believe, yes, we will continue to rally and to get into those catastrophic price levels, because that is just what Bitcoin does, guys. Bitcoin goes through these emotional cycles. It goes through these technical cycles with the halving, right? And we can just based on percentages, based on what we've done in the past, which for me puts Bitcoin at $150,000 to $300,000, anywhere between August and December of this next year. So guys, you're in a great place. You're in a great place. This is the best time to learn about cryptocurrency, because a lot of people here, they thought they were at the high. They're like, damn, Bitcoin's at a high right now. I can't, that's not worth my time to learn about investing. But they know how much it was going to rally, going from $1,000 high to 20,000. Right? We just broke the highs. And if we've seen the past, what happens when we break the highs, as these arrows indicate, we go crazy. And that's exactly what we're doing, especially given the current climate, given the amount of money that government is printing at this point with the stimulus package, another stimulus package coming, right? What is that going to do to Bitcoin? That's going to further fuel speculation that this asset could continue to rise. And that is why we're here, guys, right? We're here to make money on this, are we not? And so what's exciting about Bitcoin, what's exciting about this technology is that this market's going to grow, right? This market is going to grow. And understanding this market is putting yourself in a position to be able to capitalize, to be able to ride this wave up, right? One thing I wanna get into now, and I was kind of talking about before, but this is kind of how I do my thing. We just go where it goes, right? I want to transition here a little bit. I want to talk about a very, very important concept, and we're going to stick to Bitcoin here mostly today, guys, because this is basics, Colin. I think learning these things on Bitcoin, you can then apply it to the market. But we'll stick with Bitcoin. So I want you guys to really, actually, for this example, we do actually need to look at more coins. But I want to explain a very super important concept, and that is the difference between the price per coin and the market cap. The price per coin and the market cap. There's a huge difference, guys. And this is something that drives me up the wall. I want everyone to be educated on this because it's extremely important. When you were looking at these different cryptocurrencies here, and now we're expanding beyond Bitcoin here. We are going to expand beyond Bitcoin because I need to for this example. But we're looking beyond Bitcoin now. We're starting to see there's different cryptocurrencies, right? And we're also starting to see here, if we just even look at, let's compare these two cryptocurrencies right here. We're going to look at Polkadot and XRP, right? And if we were to collectively compare these two cryptocurrencies based on the price per coin, you would see that Polkadot has a $17 market cap, or $17 price, per coin, and XRP has a 27-cent coin, right? And one might think that, wow, Polkadot is worth so much more than XRP. Like, holy cow, like almost like 60 times, right? 60, right? That would be a 17 divided by 20. It's the per dollar per coin, Polkadot's 60 plus times more than XRP. But if you're looking at the market cap, they're actually not that far apart. Polkadot having a market cap of $15 billion and XRP having a market cap of $12 billion. So which is the correct dollar amount to actually objectively compare the two? It's not the price per coin. It is the market cap, right? And I'm going to do one more example here, again, to go through it, right? So Chainlink here, this one will help because I needed a Chainlink here, $23 per coin. versus Litecoin, $137 a coin. One could very easily mistakenly think that Litecoin is more valuable than Chainlink, but it's not. The price per coin is more valuable, but if you see here, Chainlink has a market cap bigger than Litecoin. And so guys, these numbers, the price per coin is very, very irrelevant as a number of measuring value, because these are, think of it like stocks. If you have company A and company B, and both company A and company B are worth the same amount, company A, company B, both worth the same. If company B issues 2,000 shares and company A issues 50,000 shares, which company is more valuable? It's a trick question. They're worth the same. But the price per share of the company that issued 50,000 tokens or shares or tokens, whatever it is going to be way less price per share than the one that issued 2,000. So you see what I'm saying? The price per share, the price per coin, whatever you have it, will be vastly different, yet the market caps are the same. So the price per coin is simply just the market cap divided by the number of coins there are. And as you see here, there are 66 million Litecoin, right? There's less Litecoin than there are Chainlink. There's 400 million Chainlink. They're roughly worth the same, but there's way more Chainlink. So price per Chainlink is less, right? But Chainlink is a more expensive, worth more money than Litecoin, right? This is very, very important to understand, because this is actually what can give you an accurate and give you the sense of predicting growth, right? And so you can look at these coins and you can very easily understand what are realistic price projections, what are unrealistic price projections, right? Ethereum right now has a $150 million market cap. In order for Ethereum to double here and go to $2,700, this market cap would need to double as well, because the formula is market cap divided by coins equals price, right? And so Ethereum having a $300 billion market cap, I can see that, right? Ethereum's a very, very valuable project. But that also helps us understand when somebody maybe makes a ridiculous price claim on, let's say, I'm going to pick on Stellar Lumens right now. Let's say someone says Stellar Lumens is going to go to $26. Damn, $26 for one Stellar Lumens. That's like, wow, that's great. That's 100x. Well, that would mean their market cap would need to 100x. If the price is going to go up 100, the market cap has to go up 100. They're completely correlated. So that would put Stellar at a $500 billion market cap. That ain't happening, right? And so don't get lost in the hype. Don't get lost in these crazy price projections per coin. Always equate it back to market cap, and that will actually give you an intelligent answer. Is that possible, or are they talking out their ass? Because guys, $500 billion for a project is quite a bit. The most valuable project in the world is Apple. It's worth $2 trillion. Right. And so, yeah, you're getting up there at half a trillion, maybe a trillion. You're talking Bitcoin, Ethereum, the most valuable things in the world. Right. I don't think Stellar is going to achieve that. And so that is something I think is so critical for basics, for just understanding how to really look at the market, is understanding the market cap. And so when you're like potentially looking at an altcoin that can, because here's the thing, guys, this is another basic lesson. Bitcoin is already at 600 billion. Right? Bitcoin could easily double and go to 1.2 trillion, right? It could also triple, go to 1.8, right? But for Bitcoin to do 100x from here, to go to $3 million per Bitcoin, which maybe in 20 years, sure, but like in the next, really soon, that's putting us at a market cap of $60 trillion, 60 trillion. That's more valuable than the stock market and all these things. So you're like, okay, wait. Right. And so you understand here with the top currencies, the more market cap they have, the less growth you can expect. And this is, understanding crypto, we're all going to grow, right? Things are going to grow. I do see Bitcoin going to 150 to 300,000. I do potentially see this 10xing 6 trillion. I could see that for Bitcoin. 60, you know what I'm saying? So 100x for Bitcoin, probably not going to happen. But maybe, you've been digging around in crypto, you've been digging into the DeFi. You've been listening to me shouting out DeFi, talking about all the amazing things happening over there. Maybe you found a project like way down here. I'm going to shout out a gem for you guys out here. Let me pull my watch list. Maybe you found a project way down the market cap that you're interested in looking into that has a much lower market cap. Something like PolkaStarter. There's only $61 million in this. And so if PolkaStarter even gets to $6 billion, that is 100x. That is going from $1 to $100. So the guys, the projects that have that kind of potential, the point of this little part right here, the point of this part, the projects that really have 100x potential plus are not in your top 20 projects. They're not the ones that everyone's talking about, right? And understand here too that these projects up here at the top, they have less growth potential, but they're way safer, right? They are more established. They've been around longer. Like they have more, like they're more a safer investment versus these ones right here. You have to expect, guys, that if you're investing down here in these low cap coins, that your investments can go to zero. Right? I'm using 1% of these small ones, and I'm kind of getting a little out of what I wanted to talk about here. But understand, guys. Now this is where I have to give you guys the risk management speech, right? Because you have to understand that you can only invest money that you can afford to lose. And there's a really good question in the chat. I'll get to that. It's like, you can only invest money you afford to lose. Do not invest money you cannot afford to lose. Guys, we're talking and very excited about this. Yes, I believe these things are going to go up, but at the end of the day, be smart, right? And I'm going to actually address this question, and then I want to talk about one last thing called dollar cost averaging. What determines market cap? Coin price times supply. Yes. So that is the formula for it. But yes, Alex, you're right. But yes, isn't coin price determined by market cap supply? So what would determine the market cap change initially? So isn't coin price determined by market cap divided by supply? Yes, correct. So what would determine the market cap? Okay, so this is where market caps can get a tiny bit tricky, right? When we're getting into a little bit of the details here, but this is important information, and it's important to understand how these markets work, how assets work, right? This is basic call. The market cap for Bitcoin right now is $600 billion. Does that mean that there's $600 billion invested into Bitcoin? No, absolutely not. Here's how markets work. Bitcoin right now is trading for $32,000. If there's anybody on the market, it just jumped up to $32,340, right? And so we just saw a price change just live as I started explaining this, and we just saw it again, right? And so Bitcoin is trading at $32,317 right now. If I decide that, man, I really want to buy some Bitcoin, and there's nobody, that's what it's selling for right now, $32,321. But let's say I just missed that price at $3,217, for example, we just looked at, right? Now it's $32,321. So that's the price I have to pay. And if another person sees me buy it and they want to buy it because I just buy it and they see other people buying it, well, guess what? They can't get the price that we just got because we just took those orders. And so on any market, they work by, it's contracts. If I'm buying, you're selling. If you're selling, somebody else has to buy. There has to be a match, right? And so what happens with cryptos and in relatively stable markets, in relatively high liquid markets, which crypto is definitely getting there, right? The liquidity on crypto is continuing to rise. The stability is continuing to rise. As assets are traded more over time, they become more stable. People understand the liquidity. People understand the value. But in the beginning, when these assets are so new, and especially when they get into where we're at right now, where you get into price discovery, where you're at prices that have never been seen before, the prices can be very volatile, right? Because how these work, it's just an order book. So let's say there's a bunch of people, let's say there's 10 people willing to sell Bitcoin right now at 32,300. But let's say 20 people come in that want to buy Bitcoin at 32,300. Not all 20 of those people can get their orders filled because there's only 10 people willing to sell at that price. So what's going to happen then is as soon as those 10 orders get filled at 32,000, there's nobody left willing selling at 32,000, but there's still people that want to buy it at 32,000. The price is going to go up. And now the people that are willing to sell it at 33,000 are going to get matched to those people. And so the dynamics of price that actually move it up and down, there's only one thing that moves price up and down, guys. This is huge. This is a nugget for trading. This is a nugget for any market you trade in. Just the psychology of understanding how markets work. So there's one reason why prices go up and down. Does anybody know? Drop it in the chat. If you study Mark Douglas, you should know this. There's one reason why price goes up and down. There's one reason at all. I want to know who studies Mark Douglas here. Belief. Yes. That's it. It's conviction. It's conviction. The only reason price goes up and down is conviction. Think about it. I have to buy Bitcoin right now at 32.4. I have to buy it. That's the high, right? Right now, that's the high. So I am buying it, believing that somebody else after me is going to buy it at a higher price than I did. So I have a conviction that Bitcoin price is worth more than what it is right now. And the only reason someone would sell something is because they have a conviction that it's worth less than it is right now. Because if I'm going to sell it here, that means I believe somebody else is going to buy back in at a lower price than me. And so the only reason prices go up and down is because of conviction and belief, right? And so the market caps of these coins, yes, they can value very, very fast and actually with not that much money. It doesn't require millions and millions of, it's not going to require an additional $400 billion of capital going to Bitcoin for it to hit a $1 trillion market cap. Does that make sense, guys? It will not require $400 billion of Bitcoin buys, of Bitcoin volume. It will not require $400 million to make Bitcoin become worth $1 trillion. It would simply require a short of sellers, a shortage of sellers, and a demand of buyers, a price demand. All of a sudden, if there's a flood of buyers to the market, there's not a lot of sellers, and all of a sudden the sellers, all those the sell side of the order book is dry, price will skyrocket. And especially if more people keep running to it, because like, damn, it's blowing up, let's buy more, let's buy more. And that's why you see these cryptos pump so freaking fast, so high. Because it's not that there's actually that much money in it, it's because like there's nobody willing to actually take the opposite side of the trade. Who's going to sell that thing when it's blasting off like that? And so it blasts off like crazy. And so that's what actually drives the market cap. It's a little tricky, but it's important to understand because it's not as like cut and dry of, oh, there's 600 million in Bitcoin right now. That is what it's worth. This 600 million could evaporate very, very quickly if all of a sudden the order book was filled with sell orders and nobody wanted to buy Bitcoin. Then the market cap would become very low. And so the market cap is literally just a current price point, a current opinion that the market has as a whole of what Bitcoin's worth. It's not the actual money, it's what it's worth. So I hope that explains. I took a long time to explain that because this is a beginner's call, and I think that is very applicable to all markets, not just crypto. The only thing that drives anything up and down in any market is conviction, belief. But yeah, guys, I love the questions. I love the questions. Keep them going. I did have a recommendation from somebody. I appreciate you for sliding in the inbox. Guys, I'm always open to do these kind of calls. You guys know I do them every Wednesday. Someone was asking me, just some more basics of like, now that you kind of talked about what this stuff is, you're like, damn, this is cool. It's exciting. Shit, I saw that chart. He thinks it's going to 150. I want to get some, right? Let's talk about that. Let's talk about that. Because I want you guys to get some Bitcoin here, right? But I don't want you guys to, exactly, that's what I'm going into right now, Alex. I'm going to talk about wallets, right? I want you guys to get Bitcoin, but I want you guys to be safe. I don't want you guys to buy Bitcoin and lose a bunch of money right away. I want you guys to also be able to store it safely, right? And I want you guys to be able to build your way, get your way into this market, build your portfolio into this market, and do it without stress, right? Do it without worrying, do it without having to check your fucking coin market cap every 2 seconds at work. Oh shit, I don't want you to be doing that, right? And so real quick, I'm gonna talk about, there's 3 different ways to make money in crypto. There's 3 different ways to make money in crypto. I'm gonna do this one really quick, and then I'm gonna talk about wallets. 3 different ways to make money in crypto. Number 1, build a portfolio. Right? This is what I do in crypto. I've been building a portfolio for a few years now, right? And building a portfolio is doing what? It's buying and holding, right? This is something very infamous in crypto. They call it hodling. Who knows what hodl stands for? Who knows what hodl stands for? Drop it in the chat because it's kind of funny. Because in crypto, like as we saw in the past with Bitcoin, like Bitcoin goes crazy, right? First time I bought Bitcoin was right around here, $6,000, almost at the high. And then it came all the way back down. And we have these kind of cycles in Bitcoin where there's about a year and a half where it goes crazy. and then it kind of consolidates and does nothing and basically shakes everybody out, makes everyone think it's nothing again before it goes up again. But if you know when the halvings are, right, you know when it's going to go up, so you don't have to worry. But there's a reason why people give this word hodl such a it says, yes, hold on for dear life, because crypto is wild, crypto is volatile, right? And so with investing in Bitcoin, when you're buying and holding, right, we're not selling, guys. This isn't like, I'm not buying Bitcoin to double it up like tomorrow and then sell it, or next week or 2 months. I'm not buying it to pay my rent. Like, I'm not, no, this is building a portfolio of assets, digital assets, that I'm going to hold for a long, long time. And that's what I mostly focus on, guys. And I'm going to show you how to do that effectively and safely real quick here. And the other two ways to make money in crypto, you can trade it with margin on MT4. This is what Swipecoin does, right? If you're not on Swipecoin, if you're not on DCX, man, shit, you're sleeping on yourself. Crypto Picasso is a G. Dude's literally calling thousands of pips. You know, we actually all just caught a trade together today on Bitcoin. We caught that bounce. I'm going to actually just pull up the chart. I was going to bring up the chat. If you're in the chat, you would have saw the setup. Sheesh, who sees it? That's smart money, though. And coincidentally, that's a 618 extension. Fibonacci's been Crypto Picasso's been talking about that for a minute. But look at this setup, guys. I'm not going to take time to explain this right here, but if you know, you know. Mitigation out there, and we caught that buy. So you can trade Bitcoin and make money on Bitcoin through trading it on leverage, just like you would Forex, right? And the last way to make money in crypto is something called exchange trading. I believe this is the future of what we're going to be doing here. This is swapping, you know, crypto for crypto. This is swapping crypto for crypto. So example would be like ETH for Bitcoin. You can look at an ETH Bitcoin chart, which I've been talking about a lot lately, because that shows that ETH is actually going to outperform Bitcoin, because ETH is getting stronger, just like Euro USD. You know, any currencies that we're familiar with, you can do the same thing. Exchange trading this, you would do this kind of trading on Binance and Uniswap. There's other exchanges, but that's just an example of two places you would be able to do that on. Why is it not letting me? And Uniswap. So this is the three ways in which you can make money in the crypto world, right? Like I said, I think this is the future. This is something we're continuing to look at as the market gets older. We know the value of these coins has definitely become bigger. Exchange trading on margin, like I said, Swipecoin is the shit. Definitely look that up if you haven't. Look into that. But we're going to talk about today for the rest of this call, to finish up this call, we're going to talk about how to build a portfolio and what wallets to use to do that, such a thing, right? Just do it. Bitcoin buy. Yes, we did. Ultimate savings account. Yes, it is. Because why? Because it stores value, right? US dollars do not store value. Crypto does. So, guys, last thing we're talking about, yes, is how to build a portfolio. First things first, when building a portfolio, never, ever, I swear to fucking God, do not throw a friggin' fat lump sum of money at this market. Guys, this market swings 10%, 15%, 20%, 25% in a day, and that's normal. Would you want to invest potentially something like your life savings, your 401k, the equity in your house? Would you want to see that amount of money that you've been building for a long time lose 25% of its value in 24 hours? I don't want that to happen to you. I don't want that to happen to anybody. And that could, if you just decide one day, well, fuck it, today's the day I'm going to throw 10K into Bitcoin right now. Don't do that, guys. Don't do that. And especially if you guys are beginning and you're beginning to build your portfolio. Don't do that. What you want to do is something called dollar cost averaging. This is not my strategy. I didn't make this up. I didn't create this. This is the most proven investing strategy to mitigate your risk in building a portfolio in any market. It's called dollar cost averaging. So what is dollar cost averaging? Dollar cost averaging is deciding to invest on a time frame of your choosing, right? You decide. You can in dollar cost average. What the idea is that you're going to create a steady flow of money that's going to be going into this market, right? And you're building your position over time instead of just building at one point. I'm going to explain exactly why you want to do that. Bitcoin, as you see here, is going absolutely crazy. And basically since September, it's been on an absolute tear here. Dollar cost averaging is investing on a regular time frame. Example, every day, every week, every month. I personally decide to do it every week. I get paid every week, so I invest every week. A general principle for investing is 10%. 10% of what you make, right? That's not going to break the bank. I guarantee you guys, you can go without. And this is one thing my name is LeSavage. Before I do this, before I say this, this is for newer people, but do I have permission to be savage, guys? Can I just tell you how it really is? Can I be real? Drop a 7 if I can just be savage for a second here. And guys, remember, Matt Rosa says it best. If someone says something that stings, it's because it's cleaning something out, right? Alcohol, when you dump it on a wound, it stings, right? If it doesn't sting, there's nothing to clean. So if it doesn't hurt, it's nothing to hurt. But if it hurts, it's because something it's a wound that needs to be cleaned up. There's not a single person here that can tell me they don't have money to invest into Bitcoin. There's not a single person here. I don't care who you are. I don't care how much money you make. You cannot tell me you don't have money to invest in Bitcoin. That's 100% bullshit. And you're fucking playing yourself, honestly. 10%, guys. 10% off the top of whatever you make. If you make $100 a week, you can take $10 and put it into Bitcoin. And the reason you say you can't is the fucking reason you need to. Don't let the reason why you need to do this be the reason why you don't. I've heard it all. I've heard a lot of people say, man, I really wish I would have bought Bitcoin, man. I was waiting though. I was waiting for it to go down or this reason or that excuse, guys. Don't fucking give yourself that excuse. If you've been on these calls and you've been learning about crypto and you're still sitting on the sidelines, what are you doing? What the fuck are you doing? You've had 2 weeks here of pullbacks to get in. You guys gave me permission. You guys told me I could do this. So I'm not gonna hold back here for a second. Like, really, what the fuck are you doing if you're not in crypto and you've been watching these calls, if you've been involved in this community? Like, are you just waiting for price to go lower? Like, I don't understand what you're waiting for, really. And so I'll kind of leave it at that. That's my savageness for today, right? Buy Bitcoin, get in. But remember, do not throw it. And so how you want to get Bitcoin is to create a dollar cost average. Guys, it's super simple. You can buy Bitcoin on Cash App, right? You can buy Bitcoin on Cash App. This is a phone. You have the app. You have to get on your phone. Actually, apparently you can do it on your computer as well. Dope. And you can do it on here. You can go on the app. I'm trying to see if I can do it on here. Yes, you can buy Bitcoin. It says it right here, right? And I'm sure you guys know how to use apps. If you need some help with that, we can help you out. But you go on Cash App and you set up an auto buy. Set up an auto buy to take out 10% of what you earn and put it straight into Bitcoin. You're going to hook it up directly to your bank account. And the reason why you're going to want to put an auto buy on Bitcoin, and you're going to thank me later for this, is because I know a lot of people that when Bitcoin hit 18,000 here, they were like, yeah, I'm going to start buying Bitcoin once it comes back down to 10 to 12. Guess what? It never did. How many people are looking at Bitcoin right now here at, how many people said at 40,000, oh, once it goes back down, I'm going to buy it. This is your opportunity. But even looking at this price right here at $32,000, you're like, oh man, it's going to come back down here. I'll buy it when it comes back down. And then next week we print a candle, or this week we just print a candle like this. And so I don't want to ever be in that position, because I've been in that position before where I'm like, shit, I wish I would have bought Bitcoin. You know, so what I did, I made it super easy for myself. And I just buy it automatically every single week. I don't even have to think about it. Every single week here, I was buying Bitcoin. I've been buying Bitcoin since back here. Every single week, we've been buying Bitcoin. And so it's like when people will say, well, what are you going to do now? Price just pulls back. Oh, shit, I'm going to be buying more. Price just went up. What are you doing? Buying more. Why? Because I'm building a portfolio. Why? Because I understand this thing has long-term potential. I understand we're not even close to where we're going to end up. We still haven't, we haven't hit 100K yet. We're not investing for the short term. We're not investing for just for today, for tomorrow. We're investing for next year, for the years, for our family, for future people, right? So do yourself a favor, set up an auto buy and forget about it. Like seriously, it's it's one of those things, and it really helps with psychology, guys. And so what I do is I'm auto buying every single week, and then I am actually, if you want to buy more, then you can buy the dips. But at least when you're auto buying, your dollar cost averaging, like I said, this is a proven strategy. This is a proven investment strategy on how to get into markets, right? And so you can auto buy on Cash App, you can auto buy on Coinbase, right? I think my Coinbase is logged in, so you might see some of my altcoins. Oh no, it's not. Cool. But yeah, you can auto buy in here. You go to Bitcoin, you go to, unless you want to sign in to do this, you can click a buy, you can set up an auto buy. So this is the two places that I recommend to buy cryptocurrency in the United States. The third option for you guys would be Gemini. And I'm going to talk about places not to buy crypto because there's a few that you don't want to buy crypto on. Gemini is also another place where you can buy Bitcoin, where you can start creating your portfolio, right? So these are my three recommendations. I saw one in the chat, and I don't mean to not knocking on anybody. I'm just telling you what I know, what I think is best, right? What works for me. When you buy your crypto on Coinbase or Cash App or Gemini, right? What you're going to want to do when you buy that crypto is you're going to want to actually take it off of that place and store it in your own private wallet. And this is the last thing we're going to talk about. And so you're going to want to actually take it off. You buy your Coinbase, you buy your Bitcoin on Coinbase. You can buy it there every week. And then, what I do is I let it stack up for a couple of weeks, and then I'll move it off of there. Because what you never want to do is you don't want to leave it in those exchanges, right? Because here's the thing. This is what Bitcoin is for, right? Bitcoin is designed to be the money of the people, right? What's cool about Bitcoin is that you don't need a bank to store your Bitcoin, right? It's very different because it's a transition. It's a new thing for people, right? US dollars, when you think if you had a lot of US dollars, you put it where? You put it in the bank. But we're lucky, we've never really experienced a great financial crash. We had a little bit of a reset there in 2008, but we've never really experienced currency crisis or coin, like we're starting to see coin shortages, but ask some of the people in Venezuela, how it's going with and this is not a dig at all. This is not a dig at all. This is real shit. Ask some people in South America how they trust, how much they trust their money in their bank, how much they trust their currency in their bank. The Venezuelan bolivar is lost. It's worthless now. In the last 7 years, Venezuelan bolivar has become worthless. It's lost 99% of its value plus. Right. And so, when you have your money in your bank, is it even your money? If you have to pay $5 to get your money, is that your money? And so this is the whole point of cryptocurrency. My cousin's 15 years old. He's been trading in crypto since he's like 12, 11. I think he's 16 now. But he's been trading in crypto longer than I have. He's been trading about 4 years, and the kid has about actually 6 figures net worth plus in crypto. He's not legally allowed to own his own bank account. Do you think he would ever actually take his money out of crypto and put it in his bank? I already take it out of his own hands and give it to somebody else. He has complete custody over it in his own hands. And that's the beautiful thing about crypto. Anybody can go in the markets, DeFi, Uniswap, make this money and control it for themselves. That's the whole point. Because, what's happening in Argentina right now, they have a currency control crisis. They have a currency, like, what's it called? I forgot the technical term. But in Argentina right now, they had capital control, I think is the terminology for it. And essentially, if you want to exchange your Argentinian pesos for a different currency because Argentinian pesos are getting wrecked by inflation, you can't. The bank's like, nope, can't. Sorry. And so, like I said, if your money isn't in your hands, is it really yours? And this is, call me crazy, but in times of crisis and how much the world is changing right now, it's like I want my assets in my hands. And I think that's the beautiful and the power of Bitcoin. I understand some people might not want that because with great power comes great responsibility, right? And so the fact that I can have my Bitcoin in my hands, in my wallets, nobody can ever take that from me. No government can seize that. Nobody can stop that. No one can prevent me from sending that. But if my money is in Coinbase, Coinbase can block my account and remove all access from the crypto market for me. They can freeze all my Bitcoin. They can take it all without question. Why? Because it's not mine. It's Coinbase. If I leave my money in Coinbase, it's not my money, it's theirs. It has my name on it, but it's not mine. Same thing in Gemini, same thing in this one. So what you want to do is you want to take your crypto. If you're building a portfolio like I am, if you're trying to hold it for the long term, you need to take your crypto off of the exchange. This is why I will never buy crypto on PayPal. You cannot withdraw your crypto from PayPal. It's not your crypto, it's PayPal's. You're just helping them buy more crypto. You need to take your crypto off of these exchanges and put it on something like Exodus. Exodus is one of my favorite wallets. You can download it on exodus.io. You can get it for desktop. You can get it for mobile. I actually already have it downloaded. It's super cool, super dope, super easy. Bitcoin, guys, don't be afraid. It's just like email. Once you get familiar with using Bitcoin, I don't know if this is my password. We'll see. Once you get familiar with using Bitcoin, sending and receiving it, using different wallets and apps like this would be just like opening up a new social media, opening up a new messaging app, right? These things are going to become very, very common and very, very normal for people to use. And to send Bitcoin here from your Cash App, all you have to do is hit receive. I don't have any crypto in here, but it's going to say receive. It's gonna, I don't want to update right now, but you definitely want to keep your app updated. This address, right? If you want to send Bitcoin to anywhere, all you need is their address, just like email. If you got their email address, you can send them an email. If you got the Bitcoin address, you can send the Bitcoin there. So every wallet you have is going to have one of these addresses, right? All wallets are going to have an address list like this, and this is where you're going to want to store your cryptocurrency. So again, where I like to purchase Bitcoin is Coinbase, Gemini, or Cash App. Where I like to store my crypto is Exodus. And if you want to go like a little leg up, Exodus is good, but Ledger Nano is better, right? Ledger Nano is better. If you're going to building a portfolio of 4 or 5 figures plus, definitely take the money and invest in this, because this is the safest way to secure your crypto, and it's literally on your ledger. My ledger is in my safe. I just I gotta find a new position for that, because now you all know it's in my room over there. But yeah, Ledger is the best. Exodus is good. Ledger is better. And guys, do this, guys. Please, please, please do this, because I'm a savage. I'm not scared to tell you guys the truth, how it really is. I think that's how people learn best. You can't. Life is risky, guys. Life is risky. You know how risky it is? None of us are coming out alive. That's how risky life is, right? And so the biggest risk is not taking any risk. But anyways, you need to be aware of the risk. And guys, Mt. Gox back in the day was Binance. Mt. Gox was the Binance way back in the day. Guess what happened? It got hacked. Guys, Bitcoin cannot be hacked. The Bitcoin network cannot be hacked. Never has been hacked. Never been hacked. Can't be. Otherwise, it wouldn't work. But Mt. Gox, a centralized exchange, can be hacked. Coinbase can be hacked. Gemini can be hacked. Binance can be hacked. So this was the lesson that the whole crypto world learned back in the day. And this is a lesson I have to share with you guys, because if you don't know this and you didn't know that everybody that had their money there lost it, you might leave your Bitcoin in PayPal. You might buy Bitcoin in PayPal, because you can't even take it out of there. I would never use that. But you might leave your Bitcoin in Binance. You might leave your Bitcoin in Coinbase. And God forbid, like worst case scenario, I don't think it's going to happen. I don't want it to happen. But if it did, and you didn't ever take your crypto out, it's gone, guys. It's gone. So don't play yourself, right? Take the time to download Exodus to learn how this works. It's very easy, guys. Take your crypto that you're auto buying here, every month. It's not like you have to transfer every week. Like I said, I'm buying it every single week, and usually about once a month, maybe once every 6 weeks, I'll take that sum and I'll push it off and put it onto my ledger, right? And so, guys, remember, dollar cost average, and don't invest what you can't afford to lose, and buy Bitcoin and short the banks.